Well, ladies and gents, we are here with this whiteboard. Why? Because I took a trade this morning and I showed it to you all in the New York live stream. If you want to see that, go back and watch the live stream. But it was on the principle of a recovery of a red vector candle. Now, some of you that might be coming through this channel right now, mad love, my name is Tino. Welcome to Traders Reality. Are probably wondering, what the is this red vector candle about? So what I'm going to do is show you exactly what I did and help you understand how you can search for this one structure in the future. So let's get with the program, ladies and gentlemen. In front of you is the structure that we're going to be talking about tonight on this whiteboard. I'm going to break down everything that you need to understand in order to exploit this sort of behavior in the future. Now, if you did watch the live stream this morning, I closed the trade that I took this morning on the live, all right? So we did make a decent return for the day at £15,347, trading the idea of gold returning back into the vector. Now, this was with options. I entered in at 19 strike and then, of course, closed at 53. When you actually stick to a strategy and you do exercise good risk management, you can actually exploit the market very, very well. Just for the nature of demonstration, let me refresh this for you. Looking at the last 90 days, I started off with a small amount. So I just go to the final page and you can see that I started off with £3,500 and we were effectively able to then grow the account all the way to £121,297. And that is just trading the options, but trading the idea of the vector candle recovery. So let's get with the program and break down exactly what you need to understand. So let's break it down. The red vector candle that you saw in the start of the video, all right? You could see that it was this long red candlestick. Let's just color it in, make it all nice and enjoyable for us. So if you don't know what the red vector candle is, I suggest you go onto the Traders Reality website. There is a free course on there that's called Breaking Down the Hybrid System. That's going to explain everything about the vector candle. But this is for the person that may be new and hasn't taken that course, and for anybody that is already in with the hybrid system. So the red vector candle is when price moves down at speed. Now, what's going on inside of there? Well, we know that from the previous move to the upside, there's more than likely people in long positions up here that have got margins all the way down there, which means that the red vector candle in principle is designed to move price into those margins and attack those margins and effectively become the candlestick that allows the market maker to build longs. That's the key aspect to the red vector candle. To understand that the red vector implies that the big players are building positions as price drops. So they are building longs. So what do you need to identify to assume that there could be a setup forming? Well, we know that the red vector means that the market makers, dealers, whoever's in the game of pushing price to wherever it needs to go to, they are building longs by the logic of the red vector candle. So when you see price create a big red vector candle, the ideal scenario is that when price starts to stabilize at the lows after the vector has been created, that's the first clue that something is about to change. Now, what is it that you need to be aware of inside of this range right here that could be developing to suggest that price is going to come back towards this vector candle? Remember, this is an imbalance in the chart, and the market usually goes back to those imbalances. Now, there is a number of factors that come into play when we're talking about this current setup that I gave, but the reason why I took the trade. What's going on with gold right now? One, it's rising like a mother. Anyways, I'm not going to say that. But it's rising. Why is it rising? It's not because of Fibonacci's. It's not because of moving averages. It's not because of any other concept out there. It's not even because of the hybrid system. It's not moving up technically because there are magical technical areas at the all-time high of 4,200 that price is just going to magically do something at. No. The reason why gold is moving up, ladies and gentlemen, is a number of factors. One, geopolitical. Well, what's going on? Political. Yeah, anyways. So, geopolitical problems. We've got wars going off, haven't we? We've got Ukraine, Russia, you've got Hamas, Israel, and all those fun and games, okay? That's one reason why gold goes up. the main reason. Now, some of you might challenge me on this, but the real reason that gold is moving up is because of interest rates. Yes, that's why gold's going up, okay? Because the expectation of the future says that interest rates are going to get cut. Why are you going to leave your money in dollars? You're going to be earning less of a yield. Naturally, when the interest rates are going to get cut, your yield on the dollar, or should I say your bonds, okay, is going to go down. So what are you going to do as an investor? Well, Tino, you know what? I feel like I'm just going to go and buy. Shut up. You're not going to do anything other than get your dollars and say, you know what? I'm going to go over to gold. Okay, I'm going to get myself some gold because even though it is a zero yielding asset, okay, the idea is that if you get your money out of dollars because its value or return in the future is going to be lower because the yields are going to get cut. In other words, interest rate decreases, okay, which is what we want because right now the rate has been changed from 4.5%. We got a cut of 25 basis points, okay? And that effectively means that we are now at 4.25%. So that means we're earning less of a yield on the dollar. Now that we're going to be getting some more rate cuts in October from the good old Fed, that effectively means that 4.25% is now going to be what? Well, we're going to be getting 25 basis points. So the range is now going to be anywhere between, well, everyone's betting for the idea that it's going to be between 3.75 and 4%. Okay? So the yield on the dollar is now going down. That's the reason why gold's going up. Then, of course, we've got other factors such as China picking up loads. They currently have around 40,000 tons, okay, of gold. So, yeah, that's a lot of gold right there. But with that being said, you've got two main reasons as to why the idea of the vector candle, okay, could get recovered in the future. There is a desire to mark prices down, to pick it up from bid, as in pick it up at a discount, to then effectively create a structure at the lows after the move has happened to then return back up into that imbalance, because the same participants who are buying inside of this candle off the back of the people that were building short saying, yeah, man, gold's going to drop, gold's going to drop. Yeah, you guys saw a little bit of a return in gold, but it didn't last too long because they were all trading it technically. They thought that that was it. It's too extended. BS. Gold can continue and the market can be as irrational as it desires to be. The idea is that as long as interest rates, or should I say that we are in now a easing cycle, that means gold will keep on going up, ladies and gentlemen. It won't stop until we get to the point where the interest rates are going to be stopped in terms of cutting. That's when we will then start to see gold pulling back. So you've got effectively macroeconomics that are leading you to understand that the red vector candle has a high probability of it being recovered. Now, what about the next bit? As I said, the red vector candle had appeared from the setup, which you can see in front of you right now. What do you notice about price action at the lows of that range? It was consolidating, okay? This is what you've got to identify in the future. If you're going to trade this logic of the red vector candle getting recovered, I'm going to give you exactly what you need to see, okay? First things first, at the lows of these ranges, okay, you need to see price consolidating. If you start to see a number of wicks appearing, okay, what does this tell you? It tells you that the order flow is suggesting that there are bids down here, or a collection of orders down here, that is happy to purchase off the people that are selling, because the idea of the move is to see gold going down because the red vector candle came into play. So it gave the illusion that the market is going down. The markets are all emotional, whether anyone wants to admit it or not. You see a red candlestick, not a vector, but you see a red candlestick, you'll be like, oh my God, quickly sell it, sell it. What you're doing, you are selling to someone who is buying. That's exactly what you're doing. You sell, someone is buying. Here is where the buying's happening. So then you then say to yourself, well, you keep going down, bro, but you're not going back. You're not going up, but you're not going down. What are you doing? And this is the idea of preparing price for something, okay, to give the illusion that it's doing something, to make some people believe it's going to go down when really it's getting engineered to go up. This is what you call building or engineering liquidity. It's preparing, it's developing price. Remember, geopolitically, yeah, gold is usually going to be moving up because of tensions overseas. Again, that's the first point. Secondly, interest rates getting cut. Okay, if new participants come into play and see that gold's been making a move to the upside and they've noticed that it's pulled back, you think they're not going to be coming into play and saying, you know what, geopolitically, interest rates, gold's got a good chance of moving back up to this point, ladies and gentlemen. Am I saying that gold has gone up just because of macroeconomics? No, it's combined. The imbalances that occurred right here shows you that there were participants that were buying. They were going on bid on gold with the intention to consolidate price at these levels here, to then make the recovery back up to try and go back into the red vector candle recovery. In other words, people were building longs, building longs, building longs. They consolidated price, added a few more positions inside of here, and then they released price back up to effectively recover the vector candle. So, environment, keep that in mind. You've got a red vector candle, okay? That red vector is currently looking nice. You're trading back into that logic. Now, that was on the 1 hour time frame that we identified the red vector candle. Now, this is where it gets to the nitty gritty of things on what you need to be mindful of. If price is giving you the wicks that we've seen, okay, in the actual post that you just saw just a minute ago, if you're starting to see price action consolidating at these levels and they're not breaking down, you can develop the idea that they are actually retaining price, building liquidity, or whatever you want to call it. What's going on is they are creating liquidity. They are creating a pressure. They're building, okay? Because if the price keeps going down and comes back up, these wicks are not because they don't want lower prices. They do want lower prices because they want to buy from the lowest point possible. So whilst these wicks are being created and you've got the vector candle up here, you've got to say to yourself and spend time understanding how they are behaving here. Couple of things you've got to factor into play. There is a possibility that price could either bounce down, take a sweep, and then make an instant reversal, which is why the next thing that I'm going to reveal to you is going to protect you so that you are entering at the best possible time to improve the probability that you are going to see price go back into the red vector candle, okay? Now listen, guys, this is not no foolproof system. This is just what happened on here. And if you go back in the charts and train your eyes to be aware of how price develops after it's created the red vector candle, you might find that it drops down a little bit more, but it will still fundamentally create that base that effectively is preparing price with the principle of wicks to then try and make the recovery back up. So what is it that you need to be mindful of inside of this zone? So let's just go back a second, all right? We've now got the base being built inside of here, okay? What is it that you need to see happening to solidify the idea that they could be getting ready to mark price back up into this imbalance zone? Remember, you know people are going long on this red vector candle. You know geopolitical events are going to be one of the reasons why people will be buying gold because they're concerned about war and they're getting it on the cheap. You know that they're cutting interest rates. Okay, so you're like, okay, cool. Yeah, I can assume that when interest rates are being cut, gold inversely works back up again because the yield is zero on gold, but you're earning less on the dollar. So it's better to go over into gold as a safe haven in principle because you're losing purchasing power on your US dollar. But anyways, you've got all this basing. What is it that you need to see? You need to see green and blue vector candles coming away from the base. Green and blue vectors, okay? Now, these vectors can come on the 5-minute time frame. They can come on the 15-minute time frame. Ideally, focus on these two time frames. Why? Because on the 1-minute time frame, you're going to get vectors all the time, okay? And it doesn't necessarily mean that that's going to be the one candlestick that actually completes it all. No. It's better when you focus on the smaller time frame, green and blue vector candles on the 5-minute and the 15-minute time frame. Let me give you an example. Here in front of you can see the start of the move to the upside, okay? So remember, this is where it was in the morning on the hour time frame. Look at the wicks that are developing right there. So we go into the 5-minute time frame, and what do you start to see? You start to see the green and blue vectors coming into play. Look at that. Green vector coming in, green vector, blue vector, and this is on the 5-minute time frame, okay? My entry point was at the break of the Asian session high. Look at how price breaks that zone. So let me just remove that. Look at how the green vector candle breaks away from that entry zone. What is that telling you? It's telling you that they're getting ready to start marking back up. And even though the red vector candle on the 1 hour time frame, as you can see here, the red vector on the 1 hour time frame was between this range right here. If you look from that top side to this range right there, okay? Even though that candlestick there was not a vector candle, right? You go to the 5-minute time frame, you can see that they broke away from the start of the vector candle on the hourly. So that's where it started, and that was the breakout, okay? Look left, you can see that there was more vector candles. There was the violet vector. Look at where the violet vector sat. So on the 5-minute time frame, you're seeing that that 1 hour vector candle is made up of a number of red vectors on the 5-minute. And of course, there's a violet vector candle that if price was going to break out, I would need to see commitment from this range. And you can see that the green vector candle broke away from that point. That point right there is the trigger to tell you that the guys who have been building the longs inside of this range in Asia and inside of this range right here are favoring to go higher. That means they want to make a return on building price, engineering liquidity inside of this range to then make the breakout to the upside. Does price do this every single day? Not at all. But you know what to look for now. For longs, you are looking for price to give you a massive red vector candle, okay? This is the criteria, guys. Massive red vector candle. You are then looking for price to consolidate inside of this range, okay? That could mean that it stays above a previous session low, okay? It could stay above a previous session high, all right? It doesn't matter as long as price is consolidating. As long as it's showing you the idea that they keep on wicking lower and then coming back up. Look at the candlestick closes. If you go back in this video, look at the candlestick closes on the 1 hour time frame from the time that I gave the setup. You can see that there were wicks and then price kept on closing higher. That is giving you a clue that they are developing the environment to try and build the base to effectively make the recovery to the upside, okay? Once you register that understanding, okay, you are then going down into smaller time frames and looking for green and blue vector candles, because what are those vectors? Remember, when price is dropping, people are going short, okay? Behind those shorts is what? Margins. That's what's behind all of those, okay? So they're going short, margin 1, margin 2, margin 3, margin 4, 5, 6. Lots of liquidity is there. The second you see a green vector candle breaking this structure and doing the opposite of what it should be doing over here, because remember, this is going down. So they're like, oh my God, go short. They think that it's going to continue lower because it's building liquidity and they think, okay, it's going to go down now. But remember, geopolitical events, okay, macros, interest rates and all that stuff. This is all the confluence that you need to justify the idea of them going back into the vector. What's gold been doing? It's been going up. It hasn't stopped. So you can only make the assumption, like I did, and take the trade. Because ultimately, you can add so many things to a reason as to why you would take a trade. Will it work? You don't know. But guess what? You've got to take the trade. Okay? Once you see the green and the blue vectors appearing, whether it's on the 5-minute, the 15-minute, and or the hour time frame, you can use the hourly, okay? That idea is that these green vectors are trying to come and attack these margins, which is what creates the speed of price developing this range and all this liquidity and getting it ready for price to come back up and eat all of these margins. That's why breakouts happen at speed, okay? So to finalize, when you see a red vector candle, all right, your goal is to make sure that you see after that, price has made a base, okay? That base could be in terms of wicks. They could even form W formations, okay? But the key aspect to it is, as long as price consolidates inside of this range, the breakout to the upside has to be done with green or blue vector candles. You have to take the idea of macros because that's what environment we're in right now, Okay, take those macros and apply it to the logic that they are going to move up because everything is suggesting that gold is going higher. All right, so I had the macros, I had the price action, and then the third thing, take the trade, because you're not going to know. You will not know if it's going to work. But as an exercise, go back in the charts and identify every single red vector candle, okay, that you can find where there is a clear imbalance and price hasn't gone back to recover it fully, okay? Go back and have a look at how price behaves after the vector appears. That's the clue. You look for how it behaves afterwards, because after is where the environment is going to potentially change, okay? Mark my words, you're going to go back in the charts and you're going to find this red vector candle and you will see how price behaves before it goes back and recovers it. That's what you've got to look for. Train your eyes to see the development of the move, okay? Don't just take a trade because you see a red vector candle and then it's going to instantly come back up. Sometimes it does. So that's where you've got to go back in the charts and train your eyes to see the variation of how this structure comes into play. With that being said, ladies and gentlemen, I do hope it does make sense and it does serve you. Remember, you're looking for red vector candles that show you the presence of market makers, dealers, you name it, who are wanting to mark prices lower to get bids and buy it on the cheap. As long as price keeps moving away from that point, you can premeditate that they're going to come back to that vector candle in the future. The only way that you can identify that is if they create the structure to give you the idea that they are consolidating, all right? And giving more people the belief that it's going to go lower, creating the wicks and coming back up, creating the wicks, coming back up. And then you are looking for the green and the blue vector candles to break away from this point to shift out to the upside. You position yourself just before the red vector candle is fully recovered. Okay, well, just before it starts getting recovered, as I showed you just a few moments ago with the image. Okay. With that being said, I hope that wasn't a little bit too extreme in terms of teaching you that, but that is the strategy that you can use. Go back in the charts and try and find and mimic this same setup. And you will see it, ladies and gentlemen. You'll see how it develops and you'll see how it goes back into the recovery of the vectors. Okay? With that being said, guys, mad love and respect, and I'll tune into you all tomorrow. Peace.